Hi, welcome to the Market Alert for Friday, the 10th of August 2018. So the pound continues to move low. We're looking at the weekly chart here. It's easy to see where the longer term targets are, and all of the hoopla in the business news talking about how quickly the pound's dropping. Well, December 16 we were down at 119. So it's not as bad as it actually looks at the moment, but of course nothing to stop it from revisiting this area at all. We'll worry when it gets down to there. So a bit to go yet, about 8 cents on the dollar there to move lower. So and there you can see once we broke 129, the market continued to move lower. All averages above the price action, which again is consistent with it being bearish. News, what have we got? A bit more today actually. We've got manufacturing from the UK and the preliminary GDP. That's out at 9:30. We're interested to see how the pound reacts to that. And then we go over to the US for GDP, CPI and core CPI, which is all rigged. No doubts about that whatsoever. You only have to go into the supermarket each week, whether it's here, abroad or wherever, to know that these inflation figures, I mean, what nonsense. 0.2, previous 0.2, absolute nonsense. Inflation is far higher. It's just the way that they calculate it, and of course the products they use to calculate it with. Well, the Dow's struggling. It's lower yesterday and lower on the overnight as well, heading back to the 20-bar moving average. It's struggling to move to the upside. Thought we might have seen some activity here, but once we got back through this double top resistance here at 25,590, the market's moved lower and sharply lower on the overnight. They're down 100 points already, so momentum to the downside building there. Yesterday, in the Dow, you can see the market managing to get above the DP level, then coming back and sitting on it, and then trading down to the previous day's close before bouncing off. Very quiet day actually. It's only about 80 points for this market. Can't be much more. Let's have a look. 97. Not a lot there at all. But they're moving down after the market closed, and then down in the early hours of this morning as well. So a bit of weakness around there. Certainly reaching the point where these markets are seriously overcooked. 10 years down the line, the debt's grown from 65 trillion to 247 trillion, increased by 8 trillion in the first quarter of 2018. It certainly begs the question how much longer this lot can stay together, that's for sure. And yesterday in Bitcoin, into the daily charts, and you'll see we had a bit of a dead cat bounce yesterday in this market. See, yesterday was higher, but overnight it's starting to reverse and go back to the downside, which again I would expect it to continue and certainly retest these areas here in the short term before any sort of move to the upside in this market. If you get the financial markets going into turmoil in October, when the US have to start paying back some of the debt off the balance sheet and printing more money, then you may see a move to the upside that will actually hold. Unlike this dead cat bounce where the markets come back more or less 100% of the move. Again, that is consistent with a market having to move lower, not higher at this point. Right, that will do it for this one. If there's anything to report today, I will let you know. Keep an eye on the pre-market session with the Dow and certainly the pound. And if there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.